Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and David Saito Chung here with a look at the action in today's session, where we saw a very weak start to the week after last week's sell-off. But Dave, we do have three stocks that we're going to be checking in on today. Okay. Well, Dave, I really hope the audience could hear you because I could not hear you just now. But as we're figuring that out,
Oh,
I'm gonna,
sorry.
there
Yeah, there
now.
we go. You know what? I guess it's been a while since
There
I
we
was on the
go.
SMT, and I apologize to everyone because I guess there are two different mute buttons. One was still muted. So once again, we have three stocks indeed, just like what Ali said. We're going to start off with a look at LPL Financial, ticker symbol LPLA, then look at a infrastructure play that could be setting up. That is Jacobs Engineering, the ticker symbol J, and finally round it out with a look at the sell-off in Pacira Biosciences, PCRX. Interesting chart action there.
Yes, it is. And now let's take a look at the major indexes to kick off our analysis today. The Nasdaq, the hardest hit, down 2.2%. We also had the S&P 500 down 1.7%. The Dow shedding 1.2%, and the Russell 2000 down by about 0.7%. So we had this strong rally after the S&P 500 follow through day, the Nasdaq following through shortly after in mid-March, but some resistance around the 200-day. We thought we might see some support for the NASDAQ at that 50-day, but that support is broken now, Dave.
Absolutely. And I think a major reason for this sell-off has to do with two things. One, interest rates continue to rise on the long end of the Treasury bond yield curve. I think we hit 2.78%. That's the highest level since around March of 2019. And, interest rates are very important even for the big tech companies. Even though they generate a lot of internal cash flow, a lot of them have actually levered up. And that means the costs of either paying for the new dividends or buying back shares is going up as well. So what we have been seeing, and not only today, is a backslide of semiconductor software, and so those kind of cloud computing related names. So that is a concern for investors right now. If you look at 0TNX on MarketSmith, you'll see that, yes, interest rates continue to go up as people sell off the bonds.
Yes, that's exactly right. However, investors who have been following IBD will know that we were raising the caution signals when we started to see the NASDAQ towards the end of March in this big run, saying we could expect some sort of pullback. Obviously, we can't predict the many factors that have played out since then. But David Ryan, who is a weekly contributor to IBD Live, said that if we didn't hold the 50-day, if we break below that level, we could even retest the prior lows here. So that scenario seems like it is now at least on the table. Again, we're not going to predict, but hopefully investors have been flexible with how the last week and now today have unfolded.
Indeed. We're not going to, just like you said, say it's definitely going to break 12,555. I think some other key news items to be watching is how long will the Russia invasion of Ukraine extend? People were hoping for a short-lived invasion and that that could be resolved quickly. It doesn't seem like that right now. So that's implications for inflation, for trade, and for the supply chain. So that's something that's really reflecting in that chart right now. On April 6th, that was just last week, because of two straight distribution days. In other words, heavy sell-offs and higher turnover on the Nasdaq in general versus the prior day, uh, undercutting that 50-day eventually also convinced us that this was a uptrend that's now under pressure. So we're not saying that the rally is dead, but we are saying that it's time to be more cautious with any new buys, to be cutting your losses more quickly, and maybe be more accepting of the current gains in your stocks right now. Maybe accept a 5, 10, or 15% gain than rather our normal target of 20 to 25% profits.
Right. And while we are seeing weakness in technology and software, as you mentioned, Dave,
Mhm.
one bright spot in the financial sector is LPL Financial with a breakout on Friday. This is a stock that Ken and I covered on the show last week. So a little bit of a follow up here. That breakout did come in above average volume, even the day before it broke out. Perhaps one could have drawn a little trend line in the
Sure.
handle and snuck in there early, but continuing with that strength here today.
Very impressive 3-day move here, Ali, for sure. I like the way you drew that trend line. Notice how the handle within this base also formed completely above the 50-day moving average. On the IBD Live show, we did comment that the actual shape of the pattern had the look of something that was V-shaped, and we actually don't really like V-shaped patterns because it implies that the stock was really in a hurry to complete the base. But on the other hand, there were two positives coming out of this quick decline and quick recovery. One, it undercut the low of the prior base that you can see we call the consolidation. I kind of look at it as a flat base. When you undercut the low of the prior base, you actually reset the base count, sort of gives a stock that time to consolidate those past gains. And you can tell LPL has had a lot of um, uh, big gains since the end of the coronavirus bear market. And so early stage bases statistically have shown to have a better success rate. And secondly, the actual decline in that cup was limited to less than 30%. That
Mhm.
falls within the parameters of a good cup with handle pattern. And think of it the same way with the double bottom base.
Yes, and that is always good to see there.
Mhm.
And we can also note, though, with the strong move, it does feel a little extended now. So that is one thing to be aware of. You know, you got to keep that watch list fresh. So when you see breakouts happen, you've already done that research ahead of time instead of reacting after the fact, like perhaps late in the day today to start getting in and already have something like this on your watch list. And another one for the watch list
Mhm.
that we have had watch list slash ready list would be Jacobs Engineering. You know, Dave, we've seen
Mhm.
this heavy construction group improve in the group rankings. So a nice breakout here from Jacobs, and it's holding its own in the buy zone in a tough session today.
Indeed, when you have a stock only down 0.66%, and then the Nasdaq, as you mentioned, down more than 2%, and all the other indexes down equally or more, this is actually a win for Jacobs. I think this is actionable, but only if we see the stock hold above that 142.10 buy point. There are a lot of good things to say about this current cup with handle. I can see that in recent months, there are bigger spikes in volume on the upside versus the downside. That's why we color the volume bars on the daily, weekly, and monthly charts based on what it did in terms of price. Certainly price pays, Ali, but we
Mhm.
also want to see hints that the institutions are stomping into that stock. And I think there's a really good sign, just like you pointed out with that red line there, that within the base itself, the heaviest volume on a weekly basis for Jacobs was on the upside. So that gives us a hint that funds are accumulating shares. I do want to also give a caveat though, and that in the related information panel, I was taking a look at the fund ownership characteristics, owners and funds, and I was a little disappointed to see that there hasn't been a major increase in the number of mutual funds owning the shares since the second quarter of 2021. Prior to that, pretty decent growth, This company is a small, large cap, if you will. We kind of look at companies with a $15 billion market cap or more as large cap. And so this area is a little deficient in my view.
Mhm.
But at the same time, there are a number of A-rated funds, and two, this is an interesting turnaround play given that the recent growth has not been solid, but Wall Street is expecting some double-digit return to earnings growth.
That it is, and all of that information right at our fingertips on this Market Smith chart here. And last but not least, let's check out a name in the biotech sector. So we
Mhm.
have PCRX, Pacira Biosciences, a very good looking cup with handle breakout after the earnings report in late February, and a picture perfect run up to that 20 to 25% profit taking zone, which seems like, Dave,
Mhm.
a great time to have locked in some profits in this stock.
Absolutely. For those of you new to Marcus Smith, you can see we have that mint green strip between 80 and 83, and that highlighted the price range from the recent breakout at $66.74. If you had bought it smack dab on that breakout point, then by last week you would have had a 20 to 25% gain. That's what that mint green area looks like. So for many stocks, we do advocate taking profits, at least a third, at least a half of your position on the way up, because inevitably they're going to fall back and pull back and cool off. And that's exactly what we saw with PCRX today. This was the biggest one day, single day point loss. And that concerns me because it
Mhm.
also showed a heavy volume, indicating that there was somewhat of a rush for the exits by institutional investors, and so I'd be watching this one carefully and not letting any remaining gains slip away in the stock. Now you've got the weekly chart there showing that there was a bounce off that rising 10-week moving average, that red line, and it's well above that black line, which is the 40-week moving average. Right now, I'd be watching that 10-week moving average, seeing if it adds support to this very interesting company that deals with the delivery technology of medicines.
Mhm. And I think you make an interesting point about selling not being an all or nothing proposition, that taking things in thirds is a good way to go if you're
Mhm.
trying to hold out for a bigger gain, and perhaps that first third at that 20 to 25% profit taking zone, the second third on a day like today, a close below the 21-day line, and especially if you hadn't
Yeah.
taken profits previously with that biggest 1 day point drop, as you mentioned, and then see if it can hold the 10-week. Maybe that's your final sell signal if you see a decisive break there.
Absolutely. And I'm glad you mentioned that 21-day exponential moving average, which we like to showcase on IBD Live, as well as our leaderboard and other features. That's that green line, which is going to be a little more sensitive to the most recent action over the past 21 days, as opposed to, I know many people who enjoy our CanSlim analysis, they use the 20-day simple moving average, and that's perfectly fine too. They're very similar in that situation. But right now, I think this break of the 21-day is a character change in a short term. So for those who are short term traders, I would be in favor of at least taking some partial profits
Mhm.
here.
All right. Well, thank you so much, Dave, for all of the great insights today. Stepping in our DH here, the SMT crew. We'll have to get you in the regular rotation. I know you're a busy guy, but at least it's fun to get a special appearance from you. And yeah, always great to learn from you, Dave. So thanks so much.
It was my pleasure too. Thanks, Allie.
All right. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. You can catch Dave hosting the show along with special guest David Ryan. Perhaps we will get an iPad demo. We'll have to see what they have in store for the educational segment, but be sure to join us, investors.com/IBD Live, for all the details. We'll see you there, and we'll see you right back here tomorrow after the close.